Hello viewers, in this video I'll be going over Gold Miners Junior ETF ticker symbol GDXJ. Today we are up 1.4% and we have about 1 hour left in trading. On the 1 hour chart we do see the 1 hour MACD is positive, and on the 4 hour chart we do see a convergence on the 4 hour MACD. We were oversold on the RSI, and today we are currently above the 18 and 19 or 9 and 18 moving average, and we also see the 9 moving average soon to be converging onto the 18 moving average line. And on the daily chart we do see we bounce right off of support on the 100-day moving average, and if this were to break, the next possible support will be the 150-day moving average, or this slightly reddish line, and that also coincides with the price range that dated back to June or late June, between June 24th and July 9th. So if we were to break this support, we may encounter the next support around $34.30. So if we were to continue to move on higher and say make a reversal, the next resistance will be this 50-day moving average, and that is currently at the price of $39.50. And the reason why I chose that line, because we see a trend line. We made higher lows recently, so if we mark that, we may get a possible resistance at that level. So there's a downward slope. We need to break above this resistance level at $39.40. So if we were to touch on to that resistance level, that price movement is roughly 5% to the upside, and if we were to move down, that price movement is roughly 8.4% lower. So let's head to the forecast model. On here I'll go day by day. We're GDXJ, we'll head to the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these forecast models we should focus on? Ideally the model that is the best match to the current trend. We have the current trend right here, and below it is the trend that I believe is the best match, and this trend dates back to December 7th, 2017 to March 7th, 2018. So let me point out why these two charts are similar. So what we have here in the beginning of the trend, we average above the middle Bollinger Band. We also touch the upper Bollinger Band several times. So we have one instance there, and a second instance right here as well. And then finally, third instance right towards the end, or in the middle, and then we proceeded to break down to touch the bottom Bollinger Band right there. Next we reverted back to the mean, got rejected, failed to close or approach the upper Bollinger Band. We got rejected once more, and we see another attempt to touch the middle Bollinger Band again. So we have that there, and let's check the trend in question. So what we have in the beginning, we average above the middle Bollinger Band, and we see several instances where it touches the upper Bollinger Band. So we have that there. Next, or the second one, we have that there, and then in the middle of the trend we see once more touching the upper Bollinger Band, and then it proceeded to break down to touch the bottom Bollinger Band. So we have one instance where we touch the bottom Bollinger Band, we reverted back to the mean to touch the middle Bollinger Band, and then once more it got rejected, failed to close above the middle Bollinger Band and touch the upper Bollinger Band, and we are still hovering around the median or reverting back to the mean. So we have about 1, 2, 3, 4, 5, 6, 7 points. We also have 1, 2, 3, 4, 5, 6, 7 points. So there's reason to believe that the trends and patterns are the same. the outcome and forecast should be fairly the same. So the model that we just examined was December 7th, 2017 to March 7th, 2018. Back then, GDXJ, or Gold Miners Junior, was down roughly around, I would say, 7.3% or 73 basis points. So not much to the downside and not much to the upside. So most likely we may encounter sideways price action. And this price model or forecast model is available in the link below. Sign up for it and you'll be able to use it when it releases. And that is all. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.